Hey, thanks for tuning in once again. I just want to shoot this video on what you need to think about when buying a home. In particular, when buying a first property, because most people that have been through the process of buying a property would already know this, but it'd be a good refresher. But really, it's what you need to know when buying your first property. Number one, how? Of course, that's the number one question on everyone's mind. You need to go and get pre-qualified. Pre-qualification at the beginning is one of the most important things you can do because you need to know how you can afford to do this. Of course, there's tons of options available when you get to that point, and we'll touch on a couple of them as we go. But pre-qualification up front is very important. Of course, you can talk to your bank or you can talk to a mortgage broker. Okay? Mortgage brokers are great because they work with all kinds of lenders across the board. They're not tied into just one single bank that is looking at their interest rates, their terms. The mortgage broker is going to go out and shop around and look for everyone, and you don't pay them. Lenders pay them. They work for you, and they'll help you in the beginning figure out how to afford to do this, what you need to do, etc. Okay? The second biggest thing you want to figure out is where. You need to know what location you want to live in. Based on location, you're going to determine things like price, because you'll see what things cost. You'll determine housing type, okay? So in some areas, we're in Toronto, Ontario, Canada, this is a big deal, price, okay? Things are not cheap here. You may love a location, but you may not be able to afford a specific housing type in that neighborhood because a single detached family home is out of your price range. You might have to visit a condominium option, okay? So that sort of leads us into the next one, but you really have to find a location first. Location is going to dictate how to pre-qualify for what you want to get, where you want to get, and then you have to base your housing type on that, or at least it's part of the equation, okay? Now what? That's the second question, okay? Are you going to go to a house? Are you going to go to a detached house or a semi-detached house, right? Or a townhome or a condo, okay? Or a combination of all. You could buy any of these properties depending on where you want to live, how much it's going to cost you, and of course within each one it has its own set of things you need to think of. With condominiums, you've got maintenance fees, etc. I could do a whole video on condos. It's a completely different animal than a house. Houses, you've got other items that you have to look for too, but you want to know what you need to live in based on what your family or personal circumstances are going to be in that property. There's something that you can do in here too. So if you have a pre-qualification of a certain amount and you've got a location that you really want to be in, but this price is just not working for you, for the what? You can do something which is a completely other video called house hacking, okay? And that's a term that some other people use to basically say, hey, you're going to buy a property, rent out a portion of it to other people while you live in the same property. That could be you buying a house, renting out the basement. That could be you buying a house and renting out separate bedrooms to other people, or Airbnb or short-term renting. But house hacking is a way that you can get into something that costs more than what you can take on your own and be able to subsidize your lending by house hacking. So a lot of people do that, buy a property and rent out a portion of it in one way or another, and there's lots of different options, and it depends where you live too. You can do student rentals, you can do everything. But that's something to take into consideration. In this area here, where you're talking about the where and the what, you've been pre-qualified. In this area here, you're going to want to have talked to a realtor, okay? So at some point in here, you're going to want to have already talked to a realtor who's on your side because they know all this. They're going to help you connect with the mortgage broker, figure out what location works, look at the pricing, help you analyze it all, then look at the housing types and give you options based on those housing types. Realtor is a very important friend for you in this area. Again, I would suggest that you look for someone who's local to the market you're looking in. I wouldn't be someone who would serve you well in cottage country, but here in Toronto, anywhere would be fine. So look for someone local that's going to help you out, and they'll get the ball rolling for you here while you're putting the pieces together. Now, moolah. There's always moolah involved. So there is going to be a down payment required. Okay. Now here, where we live, the down payment for a first-time buyer, that's a terrible 5. So I'm going to do that again because it should look nice. Here, where we live, the down payment for a first-time buyer is 5% of the purchase price. However, you are going to be subject to mortgage insurance in that case because you're over the 80-20% lending ratio, but completely common because 5% here is quite a bit of money. Now, you don't need that until the property closes. The other piece of money you're going to need when you are in this process is at the time of making an offer on a property, you are going to need a deposit. Okay? You're going to need a deposit. The deposit is provided to the seller of the property in good faith to show that you're serious about the transaction. The money is held in trust, but it is needed upfront when you have an accepted offer and you wait until closing. It forms part of the down payment at the time. So it does become part of the purchase price of the property, but you need it early on the process, and your realtor, whoa, that was crazy. My camera stopped, so I am just going to continue where I was. As I said, deposit forms part of down payment at the time. Your realtor is going to be your friend and help you figure out what deposit amount makes sense depending on what you're buying, what location you're in, and the purchase price. Because in different markets, the expectation on how much deposit there is does vary, but you have to connect with someone locally to figure out what that is going to be. They can help you. Now, on to viewings. You can work with one realtor is the best thing you could do because you've already picked a location and you know that you want to live there. So pick your local realtor. They're going to take you to see each property you want to go see. Instead of calling a different realtor to see each property and book different showings, this guy is going to show you exactly what you want to see, how you want to see it. They're going to get to know your needs, wants, what you like, what you don't like, and explain everything as you go. Because when you're doing the showings, you're going to be looking at lots of different things, and most realtors are going to know what they're talking about. So for viewings, you do that, but you're going to take into other things into account as part of that. When you do make an offer, you're going to have home inspections. Okay, that's if it's going to be a single family home or a detached home, whatever it is. Home inspections are a part of it. If you're buying a condo, there's status certificate reviews, including the reserve fund and budgets and things like that. Whole different animal. But your realtor will help you through that process, understanding viewings, inspections, due diligence, all the good stuff, all the fun stuff. Okay, now costs. The costs you're going to have, one of the big ones is going to be land transfer tax. Okay, that comes in when you purchase the property. So whatever the purchase price of the property, depending on your geographic location, the land transfer tax is going to come into effect. Here in Toronto, Ontario, Canada, we have a municipal land transfer tax on top of our provincial one. So we love to pay extra taxes, but it's a hefty amount. It's due on closing. So when you close on the property, it plays into effect. Obviously, we talked about the down payment that you're going to need up front. Okay, and you're going to pay legal fees. You do not have to pay your realtor. Generally speaking, you don't have to pay your realtor for this process or mortgage broker. So mostly it's land transfer tax, deposit, legal fees for the majority of that. Okay. Now, of course, your decisions. You're going to want to balance out what I call the cost, life, style. I don't even know if that makes sense, to be honest with you, but that's what I call it. Because you might want to be in a location for a certain price, get qualified to do it from the bank. They say, sure, you can borrow that money, but then you go and do it and you're living so tight on your finances. You really want to weigh out your cost lifestyle balance so that you know that you can still enjoy whatever kind of life it is you like. If you want to be traveling, if you want to be going out for dinners, if you want to be, hitting the clubs, or if you want to just be sitting back, frugally living, whatever it is, you can make the decision, but you have to balance it out. No matter what any lender says they're going to lend you, make a decision based on what is comfortable spending monthly for you on your fees, on your housing expenses. You have to take into consideration all of your utility costs. If it's a condominium, maintenance fees. If it's a home, it's gas, hydro, water, you name it, repairs. So there's a lot to take into consideration. These are some good things up front. Mortgage broker, realtor are your friends in this circumstance. Again, questions, comments, hit me up, and I'll get back to you. Catch you next time.